India's infrastructure, and I would say China is probably the only other country which has the same scale and the breadth of product suite that is offered in India. It's pretty phenomenal. It's come to a point where we have been able to manage COVID. I mean, just imagine during COVID, we were able to kind of transfer food, we were able to transfer cash, we were able to basically provide a lot of last mile services to a most vulnerable because of the digitization space that has come about.
When everybody talks about China, how we are manufacturers, or rather China is manufacturer for the world, we are manufacturers of technology and adaptation of technology for the world. So we have taken a huge leap.
So we're going to dive directly into the topic. Unfortunately, like I was discussing with the organizers, the topic is so broad that each of them could be given a 45-minute slot. Okay? But we're going to try and make the most of what each of them can add to this conversation. So I'm going to start with Rahul. And this is the question that will be across all of you all. But let's start with Rahul. In terms of regulation, in terms of where we are as a country, and in terms of scope, where are we? And how do you see this journey play out for us? So if you could give us a big picture into insight into this, it would be great.
So I think you just want to kind of take a step back and think about finance as an industry is always kind of 2 steps ahead as far as adopting technology is concerned. So the fact that the financial sector globally and particularly in India is very tech savvy, very digital in the way it is right now, it's not a big surprise. But then the question is, why is finance important? Like, it's important because it allows people to save. And then why are savings important is because as you earn, as you save, that allows you to have that growth, right? So there's a very strong interconnectedness between prosperity and finance, which basically creates that space. So why does digital footprint matters, right? The biggest challenge in India, right, as any other emerging market in the world, is that we have a very diverse and very disparate set of people across the country. People who have the ability to pay for services, people who don't have access to services, people who may have access but are completely unable to pay for anything, right? I mean, just given the level of poverty. What digitization effectively, particularly in the last 10 years, has allowed us to achieve is that the cost of transaction has become very, very low, right? It has almost come to a point where it has become zero. Like when you are traveling around, say if you are taking an Uber, you're at, say you're just buying a cup of coffee, or even you're buying something from your local panwala. I mean, you don't really think twice about before you take out your phone and pay, scan the QR code and pay 5 rupees, 10 rupees, 15 rupees. Now, obviously there's a cost to it. There's the entire infrastructure that's been designed, but it's purely been designed as a public good, right? The way we have been able to scale it is because the government, in its infinite wisdom, right, decided that this is something that was very important, that we need to create a broad infrastructure which is cheap, which is going to enable you to basically transact at a very, very rapid pace with almost no cost attached, right? I mean, and hence, say, if you kind of think about it, credit cards or debit cards have been around for almost 40, 45 years, right? So my bank was among the first, I think, globally to introduce the concept of an ATM. Back in London, I think in the mid 60s, and credit cards have been around. I mean, those of you would be old enough, you would know that earlier the credit card machines used to have those big machines, where you would swipe it on that, and then you would take literally a physical imprint of it. Now, even when, like, I can't remember the last time I used my debit card, right? So if I'm not using my credit card, I would typically just use the UPI. And the way it's been set up in India is that it has allowed for massive amounts of financial inclusion. And so the public good impact is just humongous. Now you combine that with the entire push towards, say, the Aadhaar, what is often in policy terms referred to as the Jam Trinity, right? Jan Dhan, Aadhaar and mobile. India's infrastructure, and I would say China is probably the only other country which has the same scale and the breadth of product suite that is offered in India. It's pretty phenomenal. It's come to a point where we have been able to manage COVID. I mean, just imagine, during COVID, we were able to kind of transfer food, we were able to transfer cash, we were able to basically provide a lot of last mile services to a most vulnerable because of the digitization space that has come about, and finance has played a big part, right? Because if you are unable to, I mean, if you have to transfer food to people, you need a PDS shop, right? You need a way where that physical transaction can take place. But if you're just giving them cash or you're giving them vouchers, you can just send it on as a specific code or as a link or an SMS on their phones, and they're able to then access it. And the empowerment that comes about and the floor you put under people as a result of that is going to be significant. Now, from a regulatory standpoint, I think the underlying objective, there's a big debate, and I'm sure a lot of my panelists would talk about the viability of this model, over the slightly longer term. But the underlying objective of regulators, of policymakers in India is going to remain about financial inclusion when it comes to digitization, right? The entire infrastructure is being designed around basically three issues, I would say. One is availability. The second is affordability, the access, right? You have to provide access to even the last mile provider. So say you've got a chaiwala who's sitting in Arunachal, close to say the borders in China, versus somebody who's basically sitting in Lower Parel, being able to, they will have, basically they're using the same infrastructure. So you need that breadth and the depth of access, and that is where I think the focus is, to make it effectively so wide that it sort of creates, and it has massive multiplier effects, which I'm sure which will get discussed across the panel discussion.
Thanks, Rahul, for giving us the big picture, and you literally covered a lot of that journey. But as someone who's done this journey over the years, Vivek sir, if you could come in here and talk about the digital journey and take the same question forward and talk about the regulatory side too.
Sure. As rightly said by Rahul, that digital journey has been phenomenal in India, but where we stand today versus what we were 10 years back or 15, 20 years back, we have seen a huge leap that India has taken in its digital transformation. So when everybody talks about China, how we are manufacturers, or rather China is manufacturer for the world, we are manufacturers of technology and adaptation of technology for the world. So we have taken a huge leap. Now, I would just give you a very small analysis that I made about 10 years back. I was in one small country, and they mentioned that we have about 110% of our people banked. And I was quite shocked, how the number can be 110%. So they said, we are taking into consideration the outsiders also who come here, who are not citizens but residents, etc. And I was wondering, where India stands today. So in 2010, we were not even like 15, 18 or 20% of the people who were getting basic banking services, versus where we stand today. The numbers are above 70%. I guess most of the people who are in the age band of having some kind of financial services, I think 95% of our population has been reached. So this is a phenomenal journey that we have seen in this country. Although we again talk about what we have achieved, but let's not get over patriotic. There are other countries who were doing this 10 years back. So China was doing WeChat payments 7, 8, 10 years back, whereas we have started doing UPI and other such payment services very recently. So we have a long way to catch up on. We have definitely been leaps ahead of the Western worlds. So if you look at what US and Europe has done, until 5 years back, they didn't even have the chip-enabled cards. They had, but most of the population was not using it. So they took time to catch up on it. And there could be instances wherein they will move ahead of us, because they will again take one journey leap or one generation leap versus where we stand. So maybe 5 or 10 years down the line, there could be a stage wherein we might feel lethargy in digitization. So how do we overcome that? And that we can overcome only and only by innovating constantly. I always compare what we have achieved in our financial services to what US achieved in the 50s to 80s in their infrastructure. Eisenhower in 56, when he passed out the regulation of building highways and connecting the entire country through highways, the whole project was estimated at about $40 billion, which got concluded in about 30, 35 years, and it cost them more than $100 billion. But what it created industries, it created gas stations, it created motels, it created car companies. Same way, what innovation we have seen in form of smartphones has created an add-on infrastructure. The value creation has been phenomenal. So if you see these smartphone companies and you compare their market cap, they stand about $2 or $3 trillion. But see the apps that run on these companies. Now, all the apps that run on the companies are not, app these which run on these phones. They are not the apps that are primarily dependent on the phone or smartphone. They're providing additional service. But tech has become, just a no-brainer. You need the tech. And when you have the tech, you demand the valuation. So these apps that are running on these so-called smartphones right now are commanding a valuation of over $10 trillion. So same way, what I see in financial services, you have to constantly innovate, use this infrastructure to grow faster and in a better way.
Krishna sir, when we were talking offline also, one of the conversations that was coming up was about how you've moved from mutual fund to the financial services space, the NBFC space right now. As someone who's now looking at it from inside out, the question is tech an enabler for you, or is it the way you do business?
So to my mind, the greatest digitalization in finance that has happened so far was moving from holding the securities in physical form to digital form. So that has not only helped the stockbroking industry or the investment industry to grow, because it has eliminated the risk of holding the securities in physical form, but also helped in lending. So now you can pledge your securities online digitally and quickly, and you can take loans, right? And that's what we have started doing it. The second thing, if you see, fintechs are mushrooming, right? As per a survey, I think currently we have around 7,500 fintechs in India, and that has grown 20% CAGR in last 3 years. So whatever these fintechs, especially on the lending side, has done in last 4-5 years, and you must have realized there are so many lending fintechs, so many wealth tech fintechs, and Vivek talked about some issues, money laundering issues, or some problems with those lending apps. RBI now has come out with some regulations, which is a welcome regulation actually, because once something is regulated, and especially something related to money, needs proper regulation, because that gives credibility to the whole thing. So whatever we have done on the fintech side, especially on the lending, needs to be revisited again. Like for instance, FLDG-led co-lending, that was the norm for last 2-3 years, and it has multi-fold grown in last 3-4 years itself. All the players now are sitting on the board and discussing how to take care of this in future, because FLDG has gone out. One of the main reason why the mutual fund industry has grown in last 6-7 years especially is because of the CKYC. I was talking to my daughter last week. She was here on Diwali vacation, and still she is complaining that she has to undergo a lot of documentation when it comes to investing, right? And this generation, they don't want to get into that kind of hassle. We feel at our age that we have done enough on the mutual fund investment side. Things are easy, you can do it in quick 4-5 clicks, but even that 4-5 clicks are maybe not acceptable to the new generation. So CKYC, what it had done is, earlier, if you have invested in one scheme, one particular mutual fund, and going to another mutual fund, you have to do KYC again. Now with CKYC, you don't need to do that. Once CKYC done, you are an investor for the entire industry. So just to start, and that has led to, I think, a lot of platforms coming in and enabling the investors to perform those transactions. So
ESG is considered a niche, but it's becoming mainstream. It's a vast universe. So first I'll ask you to just shed some light on the landscape. But when we talk about digital lending and digital finance, at the same time, how sustainable will this journey be, and how do you do sustainable financing?
And right from aspiring job seekers to financial institutions and corporates, everybody seems to be talking about ESG. So how is this actually looking in a country like India? So let me talk about the good things first, just giving you a quick overview. So the regulators have started talking about it, which is quite encouraging. RBI has come out with a recent paper on climate risks. SEBI has started talking about how to strengthen the green bond regulations. So these are positive signs, and banks have started looking at it. SBI has strengthened its ESG policy. Some banks are telling that they will not finance coal. But how much of it is actually happening on the ground is something one needs to question. Or is it just like a tick box exercise? More and more we are seeing that, to comply with the increasing regulatory demands, companies and financial institutions as well are looking at it as a tick box exercise, and that's not very healthy. So I was in a round table a few weeks back with the Swedish embassy, and the ambassador was saying in Sweden, so Sweden is one of the leaders in sustainability. So she was saying that in Sweden, most of the companies, most of the corporates there, they don't look at it as sustainability as something which can, satisfy regulators or to get in more capital, but it is more like a business case. So how can I get that advantage by doing something sustainable? And I think that is very important for a country like India to kind of imbibe that, to make it a business case. Now coming to the challenges, it's not an easy, so it's not like everybody wants to do ESG and it's easy to do. So we did a project with 10 financial institutions in India, and we realized that capacities around this is a big challenge, within the banks, within corporates, to understand, how these things are done. Greenwashing, that's another thing. So at the risk of sounding a little, critical, but that's happening rampantly, not only in India, across the world, on how I report what is actually sustainable and what is not. So the regulators' indications, initial indications at least, around ESG ratings, around disclosures are quite encouraging, but there is a long way to go. And the third biggest challenge, I would say, and probably that's the biggest challenge, is on data. How data can be sourced, reported, and this is where I would like to bring in the digitalization angle on how a lot of fintech startups in the country are kind of stepping in, to look at aspects like blockchain. So for example, just giving you a couple of examples. In green bonds, for example, the use of proceeds is a big challenge, how the money is actually being deployed. And companies are using blockchain to effectively capture this data and report it to the investors. Looking at AI and ML, for example. So as you and me, if we go and spend on a particular item in an app, how much of that spending contributes to carbon emissions, and how can I offset those emissions? So there are companies who are actually doing this. And I think at every aspect, so there are insurtech, regulatory tech, different kinds of technology-based, digital-based solutions which can integrate sustainability. And that is kind of picking up in the market. And backing this up with strong regulations is something which will kind of spur the market.
India still remains a country where we talked about the vast differences. Rahul brought it up, the vast differences that exist. How does Suvidha navigate this assisted journey? And do you see that people will eventually reach a point where Suvidha's...
So I come from a space where the way Bijoy said, probably the way it looks like we are contradicting with the digitization of India. But I'll just pick up from what Rahul said, that availability, affordability and accessibility. So I'll just come with a story saying, 2007, prior to that, if you see, if you want to book a reservation railway ticket to go to your hometown or come from hometown to say metros, you actually have 1500 railway stations where these tickets are available, or you need to have a plastic money or a digital money to book it through irctc.co.in. What Suvidha did is, we went to railway and we requested them that this entire platform under PPP model, which is private public partnership model, can be lended and given to the people who are the mom and pop stores. So surprisingly, I'll just tell you, so I'm just cutting the story there. We did the integration with railway, and today 1 million shops in India, like mom and pop stores, do the railway ticket booking real-time basis using Suvidha platform and gives the convenience to all of us. And the customers are who? Customers are the one who want to give it in cash, those who do not have access to digitization, right? I'll tell you the second story. And most of, my corporate colleagues will probably relate to it. Recharges, way back in 2008 or 2009, if you see when we had to do the prepaid card mobile recharges, we go to the kiranas or we go to the shops or a mobile store and we say that I want to do a 100 rupee recharge. You buy a coupon, then you with that 1 rupee coin, you scratch that and you put that, where most difficult, I think so, not even my chartered accountancy or the IIM Calcutta, those questions must have asked. It's a most difficult 26-digit alphanumeric code which I need to punch. And the one who can succeed that in the first attempt is like, boss, your eyesight is great. Otherwise, the fonts are so small, it will have @ it will have, all the type of, that's the time when, I realized there is a keyboard called QWERTY keyboard. Why it is called QWERTY? Because all the alphabets of the keyboard are there. So what we did is, we said this is an offline problem. And to add to this problem, I'll tell you what, the recharge, mobile recharge, there are different circles. So 17 circles in India. So if you are sitting in Mumbai and you want to do a recharge of a prepaid mobile, if you are coming from Goa to Mumbai, you will not get it. And if you get it, that will be black marketed. 100 rupee ka recharge, you will get it for 150 rupees. And this was a story, and I'm not talking about like, Chanakya era, I'm not talking about, I'm talking about 2008. So what we did is, we just went into the market and bought millions of coupon, physical coupon, and at our office. An entire office, like 50 staff, were given a task to just, scratch, get the coupon, do the typing into the Excel sheet. A idiotic thing, everybody says, kya ho raha hai yaar, ye to. Then we uploaded those Excel sheets. So we have a franchisee-led network across India. We uploaded that in a way that a franchisee, when he opens up my portal, he can select through a mobile phone number. So we also understood that DOT and TRI had the algorithm of, first 4 digits and 5 digits, you can able to actually get to the circle so we did that. So when somebody goes to a Kirana store and say, hey, I want to do a 10 rupee recharge for a Madhya Pradesh circle, I would be able to give him at 10 rupees there and then itself without a single extra money from that person and at his time through a normal Kirana store. And when we did that, all the recharges company, you call it Airtel, Hutchison, Orange, were they all came down to office and said, boss, kya kar rahe ho? Are you guys hacking our system or something like that? And when I saw that there are, everybody, I'm saying I'm from a finance, so I myself have scratched like, my target was 25 coupons I need to scratch in a day and ensure that those are 100% accurately punched in, and somebody will be assigned to me as a buddy who will have to do the refresh. It was like great. And I'll tell you the third story. And this is most interesting. And here where I will say that, a lot of people who said that was UPI aa gaya, IMPS has come, now your business model is distorted. I'll tell you, they are my enablers. And this story will, probably help everybody understand that in 2012, along with the RBI, there is a norm called banking correspondence. So we just worked with the RBI very closely, understanding banking correspondence model very real time. And what we did is, we just monitored that in every bank, outside the bank, if you see in the morning at around 7:30, 8 o'clock, there is a huge queue. And SBI is a prominent bank. And that guard is, putting lathi charge over, line mein khade raho. And, those poor people are struggling to fill the form because they don't know how to fill the form, number one. And bank is going to open at 9:30. From 8 o'clock to 9:30, that, the watchman or the security guard is the owner of that branch. Everybody will listen to him. Line mein khade raho, form kaise bharna, everything. He is like, boss, main hu to pura bank hai. And at 9:30, everybody rush it. And the people come in, there is a money transfer, and the money is actually getting transferred to the hometown. And they do it, either on a regular interval, like once in a week is 100% or twice in a week, because they are all daily wage laborer, like a labor guy. What we did at Suvidha, by using an IMPS platform, empowering our own retail Kirana store, we said that 24/7, you can go to any retail outlet and give your cash, and we fill up entire data. At a back end, we had a Axis Bank as a partner. We worked with them and solved for this problem. So I personally feel that, IMPS and UPIs are actually an enabler, and we are excited with the CBDC coming in, central bank digital currency coming in. We are sure that probably, next time after 2 years when I'll be, in such forum, I'll be probably coming up with 2 more stories where we have used the CBDC as our enabler than a competitor.
Thank you.
Thank you.
Thank you so much, Prashant sir. Quick segue here before I go to Tirthankar. My office in Ghatkopar, shares its space with the largest SBI retail processing branch. Okay, it's on LBS Marg. And across the road and on the side of the road next to the Chaiwala, there are 6 business correspondents that serve only SBI. And early in the morning, before going to work, these guys will come, line up outside the business correspondent, make their money transfers, and then go to work. Because then they are done, their money transfer will happen. Okay, so it's very, very important for us to realize that these journeys are happening. And he spoke about mobile recharges. How many of you even know that 197/Paytm started as a mobile recharge company? Okay, its journey has been, into digitization has been, spearheaded and, whatever, because UPI happened, because so many other things happened that enabled that regulatory impetus that happened. Tirthankar, you've been looking at that space. Literally last week is when the CBDC journey, this week is when the CBDC journey started for India. We see RBI leading the way in this sense. So there is a retail case, there is a wholesale case where you can easily manage these transactions, but the naysayers will say there is no retail case for it because we have UPI. Okay, so in that sense, when you look at how banks are using blockchain and how RBI has leveraged blockchain for CBDC, if you could lead that conversation and the broader regulatory space that we are at.
CBDC is now a reality in India. I mean, when I'm saying how it's a reality in India, we had colleagues from fellow exchanges coming from for the conference that's happening one floor above.
Yeah.
So they had come to NSE, and when I told them that RBI has had a CBDC wholesale transaction happening with a T+0 settlement, everybody is like, what? Wow. Because, as you know, trading, let me just go back to trading here. So trading, clearing, settlement, there are 3 steps, right? So that takes 2 days. All over the world, you trade today, you get your money 2 days later. It's T+2. In India, now it's T+1. But with the CBDC, wholesale CBDC, it's T+0. So, that's the immediate consequence from a trading perspective of having a wholesale CBDC. So there are, as Bijoy rightly pointed out, there are 3 kinds of CBDCs. You have the wholesale CBDC, you have the retail CBDC, you have the cross-border CBDC, which will allow you to transfer monies, and cross-border transactions are not free. Not at all free. They are quite expensive. There are several banks, whose businesses are based on, these costs. So the CBDC is supposed to provide you the anonymity of cash with the advantage of electronics. That's the cool thing about CBDC. Now, how do you make that possible? And Vijay's case is, point is well taken. You have UPI. Why would you need CBDCs? So from the technology perspective, I will touch upon the DL aspect here as well. From the technology perspective, how do you ensure anonymity when you have, especially wholesale CBDCs, which will be account based, as the RBI's discussion paper also spoke about? Well, that will be through tokens. So they will be electronic tokens, NFTs. I mean, we've heard all that term. We've heard that term a lot. So whoever has the token has the the CBDC. It's like in old times we had bearer bonds. Whoever has the bearer bonds is the owner of the proceeds that will come from that bond. So yes, from a technology perspective, it is possible to have retail CBDCs which will provide anonymity. As to the case of why would we need it when we do have UPI? Well, the central bank's answer is that, and I was in a conference where RBI was really there. I mean, their point is, consider it as one more flower in your bouquet. It's available to you. Use it. In India, there are several ways of transfer money transfer today. You can do it in so many possible ways. And and this is something you realize how effective it is only when you go to another country and you realize you don't have UPI. You don't. You just can't transfer money. It's not as cheap, not as easy. So, and it's not as all pervasive. So all the 3 points that Rahul raised in terms of affordability, access. So UPI does provide that. CBDC will also provide that. See, I come from the equity markets. NSE is an equity exchange. It also has many other products, but equity is major. And there, as I said initially, you have T+2 to T+1. So when you have digital currencies, clearing becomes faster and faster. You don't go from, you don't have to wait for 2 days. You come to a T+0 kind of scenario. But to the broader question of how digitalization and technology is permeating, one of the points that Krishna raised, when we went from paper securities to DMAT, I was actually in, as student days, we used to go to what was called NSE clearing. Then we used to have mountains of share certificates, literally mountains of share certificates. An unthinkable term today, an unthinkable sort of scenario today. But let me touch on, one specific aspect. We've all seen the pervasive impact of technology on banking. It was touched upon in the presentation. We've seen how things have become easier for what we will call delegated investments. So mutual funds. Things have become much easier. You have central KYC. Let me talk about retail investors. Something, direct retail investors. So, retail investors own about 8% of the Indian markets. How many retail investors are there today? That in terms of number of DMAT accounts, the number is about 10 crores. That's the number, 10 crore accounts. And individual investors would be around 6 crores or so. Now, 135 crore people in the country, you have a working population of about 50 crores. Can you see the scope? Can you see the scope of improvement here? Let me give you another number here. Back in the days when I started in investment banking research, our big clients were all FIIs. They were the ones who moved the market. This is early 2000s. We were just out of the dot-com boom and bust. So all our big clients were FIIs. You had to get business from those. Today, the FII turnover in the market is about 11% on a daily basis. The retail turnover in the market is 40%. Think about it. That's the number. And this change, and we put it out monthly in our reports, this change has happened in the last 5 to 6 years. All of us would have read how retail investors, number of investors boomed during the pandemic. We've already seen the enabling platforms. Rahul spoke about the Jam Trinity. Aadhaar was there. Suddenly, you could prove who you are. You could prove identity. You had some of the cheapest, internet connectivity in the world. And you had, with enormous economies of scale, handsets became cheap. So to trade, some of you students, if you find this panel discussion boring, you can open an account and start trading. I mean, not on a Saturday, but you can.
Yeah, I was about to say it's a Saturday.
It's that easy. It's that easy. But that has also led to retail investors making 40% of the turnover in a market. And how are they trading basically? So they used to trade, earlier they used to call people. Then they started, let's do it ourselves. They did it on their desktops and laptops. Today it's just the phone. It's just the phone. So the number of, so the direction technology has taken has in this case, has been in terms of spread. Indian Indian non-promoter ownership of the markets is similar to foreign institutional ownership of the markets. That is the big change that has sort of happened in this country. Of course, there's a lot to move forward as well. We had interoperability between exchanges. You can have your trade in any exchange. You can settle in any exchange, any clearing corporation. That has happened. But still, there is a long way to go. There is a long way to go in terms of, I already gave you the headroom that is available in India in terms of investments. So there is a long way to go in terms of number of companies that can get listed. There's a long way to go in terms of overall capital allocation that can still happen because of technology. So, I see only a bright future. I see a highly competitive future. And obviously, to touch on regulation, I will echo some of the sentiments in the panel that a large part of it has been led by regulation. It's great that it has been led by regulation. Some part of it has also been led by competition, and I think that's the ideal way to go about it, because as you go to a broader and bigger market, you should always think of I don't know, Gandhiji's talisman, right? It has to be good for the guy who's the least, who has the least available to him, right? So investor awareness, investor education, so that the retail investor gets the best deal, does not get shortchanged in a rapidly evolving market. It should be something that should be the goal over the next years.
So thank you so much for doing that. And most importantly, I hope you're going away with questions, and I hope you're going away with thought points, because that's what these people bring to the table. Each of them is an expert at what they do. I just wish we had a little more time at our disposal. Thank you so much, XLRI and FINAX team, for calling us here. Thank you so much.